although it's not a time-sensitive stream, right? You can rewatch this afterwards. So I'll start at 5 in 7 minutes. We've gone through the monthly to daily and the weekly to the 4 hour, right? We've also gone to the daily and the 1 hour. Now I'm gonna push back the 4 hour and below to next week. All right. And today we'll discuss, we'll review the market and what happened last week. And then some FAQs, and then I let you all go. All right. So stop whatever you're doing, grab your coffee or tea or whatever you drink, and we begin.
Hello, Romito.
How's it going?
How's it going, my friend?
How's it going with you?
Alhamdulillah. I was
Uh-huh.
going to ask, are you going to record?
Hugo has said that he'll record. All right. If someone else wants to record as well, then go ahead.
Okay. Thanks.
All right. It's always better if there's multiple people recording, because if one messes up, right, then we can have some samples to select from. All right. Vikash Kumar. You've been doing good, huh, on Twitter? I'm seeing you. What is he, shy? Okay.
No, I'm not shy.
Okay. All right. Let's get some more people. Now, folks, I've been seeing the chat is getting a bit messy, right? Which is why I never wanted to open on it to begin with. So are you guys finding it useful, the chat? Because if you are, then it's a good idea. But if it's not being beneficial to most of you, then it is merely a distraction which has to be removed. Right? So, what do you guys think? Is the chat good, bad?
I don't think so.
Is the chat good, bad?
I don't think so.
What are you guys sleeping? Wake up.
Hello, Roman. How are you doing?
How's it
I
going?
think it's beneficial.
Hello, Roman. How are you doing?
but,
Thank you. Thank you.
Let's go. One by one. One by one.
Hello,
Okay,
Roman. How are
go
you
on,
doing? Thank you.
One by one. One by one. One by one.
Yeah, actually, I want to thank you too for your all teachings. I'm like from the level 1 learning from you a lot of things, and I want to ask you about your fundamental and sentimental analysis, how you do and what you look for.
You're welcome. Yeah, level 1. It's been a nice ride. But I'm afraid the educational part of the ride as far as what I'm willing to share to all of you is soon to be over, right? But there's more than enough, to be fair. That's number one. Number two is uh, sentiment analysis. You have the good old news is an important one, right? Because the news is a mechanism used by the people, the market makers, to build sentiment, right?
Yeah, yeah,
So watch the news. It's important. Don't ignore the news. But watch the news to know what not to do. Right? It's actually pretty accurate if you pay attention to the type of news that comes at swing tops and bottoms. A recent example is, if you guys remember, when MT4 was removed from the store. Remember? Oh, it was trending.
yeah. During the war, I think Russia and Ukraine.
MT4 was removed from the Apple Store, right? And then there's like these memes of selling iPhones, which had MT4 for higher prices, right? That happened at the dollar high and the euro high, right? So from that news, that scary forex trading is crashing news, we rallied a couple thousand pips, right? For example, that's one example of many of how to fade the news. Now, by itself, it can work, but it's hit or miss, right? If you blend it with with a sound, logical, technical analysis, then you can get a pretty accurate reading on swing highs and swing lows, swing formations, right? Which means we're not going to see these prices for a long time, right? On the higher time frame, the daily, the
Yeah.
weekly, the
Thank you
monthly.
very much. Thank you for your answer.
No problem.
Hey, Romeo, had a question
And
first.
fundamental, the other part is keep an eye on the interest rates.
Okay, one more question related to gold. I mostly trade gold, and that's why, for example, like nowadays, like war coming in Ukraine, nowadays happening, and I mean Palestine and Israel, and I think it's more related to like more like political and stuff like that. I mean gold.
Uh-huh. Yeah. When it closed last week's close above the previous week, right? And that was an indication for rally, right? I didn't mention it. I marked it on my charts, but I did not mention it in public, right? But again, I'm a firm believer in that the charts will tell you the news most of the time, right? Even you have some great technical analysts of their time, Gann, right? He would predict world events based on the charts of wheat, of beverages, food and drink, milk, sugar, even ICT, right? He mentions the charts of commodities, right, as a way to predict the future. Now, do I believe in that? No, because I'm a Muslim, and in Islam we don't believe in predicting the future, right?
Yeah, yeah, actually.
However, you can have a fairly accurate read on price, and that's all you want, right? We're traders. We don't give a fuck about the war. We don't give a fuck about the news, right? We just want to extract some pips from the market. That's all that matters, right? You want to catch some percentage move. That's all.
Okay.
The strict
Your room,
professional.
Hey, Romeo, Zubin here.
Ibrahim asked to be unmuted. He has a question for you.
Tell me. Who?
Yeah, my,
Ibrahim, the typical Ibrahim.
So my,
Typical of life. There you
my
go.
question was, relating to war and news based on price action. Could we make a fair guess that oil could be potentially bullish here, or could we use that as a sentiment check?
I haven't seen the oil chart in a while,
You
right?
should take a look.
So let me go and let's go and see what it says, right? But at the end of the session, right now, let's focus on the weekly review, right? Let's
My
review
question.
the week that
Yeah,
was. Tell me,
yeah.
Jubin,
Sorry.
there.
Yeah. You got it right. My question was very simple. In all of your videos, you just show one picture of the open, high, low, close, and you say that you see everything through the lens of it, right? But to actually do that, you need to have a very high probability of anticipating the shape of the candle. How do you do that with a very high probability?
Okay. So how do you predict the shape of the candle? Right.
Yep.
I've given out a few hints along the way of how to predict the shape of a candle, which comes after which candle.
Correct. That is the
Yes,
same
I'll
as
speak about
the
that as well.
doji is a consolidation, the large candle is an expansion, the rejection candle is a reversal, right? The same thing.
Yes, that's one small part of it. There's more to it, right?
Will
There's
you
a
be
lot more
teaching that?
than just that. Yes.
Okay. And the last question was regarding the four shapes of candles, so the sequences. You said that when price closes below the candle, then it is a
Was it four?
continuation.
Was it six? Was it four? Was it six?
It was six candles, but only four circumstances, right? The dojis are the same.
Right.
Yeah.
Right.
And you said that when price closes below, it's a continuation. So my question was, does it have to close below the wick or the open of a previous candle?
Ideally, below the
Can you come again? I think your voice is breaking.
every
Yes.
single move of the market, right?
Sorry,
My
Romeo.
voice
I
clear?
think we can't hear your voice.
Is my voice clear,
Yep.
folks?
Now it's clear.
Okay. So I was saying a common mistake many of you have probably made is trying to predict every single pip move, every single market, and trying to force it into your model. No, your model is going to come a budget time out of 10, right? That's all that matters to you. You're not trying to force your model. If you try and force it and understand every single pip move of market and try and catch every single pip, you're going to get wrecked. You're going to win, you're going to win more, and you're going to end up giving up all your profits, right? Because you're not focusing on one model with sound money management. You're just gambling, which is 90% of traders, right?
Yeah. Yep.
So that's referring to you saying, is it the wick or is it the open,
Correct. Yeah.
right?
Yep.
Okay.
It was because that
We can't hear
usually,
you.
yeah, it was because usually, I think in ICT said that it has to close above the opening price for it to be an order block. While
Can't hear. It, is my
I think
voice
we
clear,
can't hear you. Nope,
folks?
your voice is breaking.
Voice clear now.
I think if you speak a bit more,
No, it's clear. It's clear, man, I guess.
is it?
It,
Okay.
is it clear now?
Yeah, I think so. Yeah.
Okay. Okay. So I'll speak a bit about the review of this week, right? Which is the main topic for today. I said that we'll push back the 4 hour and below into next week, right? And today we'll have a market review, okay, plus some FAQs of the most frequently asked questions. You can use the chat right now if you have any questions. All right, I'll go and give a peep and look at the most commonly requested ones, which are relevant. All right.
Yeah. So I had a question, if you don't mind. So my question is, do you look at time before
Questions
you
come
even
afterwards,
look at
right?
any of the PDRs? Yep.
Questions come afterwards. Sounds good. Let me just finish the. Let's just wrap up the review right now. Okay. Okay. So we start right now. Do you see my screen?
No.
Nope. Nope.
No.
Okay. How about now?
No.
No, I can't see.
Can you hear me, folks? I think it cut off. Right?
We can hear you.
Can you hear me now?
Can hear you.
Yes.
Can't see the screen.
Okay. I'm driving, so let me just park the car somewhere. Because the house is being cleaned right now. It's a bit noisy, right? But you guys get the stream anyway. Let's go. All right, over here. Okay. All here?
Can't see anything.
Can you hear me?
Yes.
Can you hear me? It's cut.
Yes.
It's cut. All right. Let's start right now. Let's go. Share the screen. You can see it now?
Yes. Yes.
Okay. So I've seen that most of you trade FX, right? So I'm going to go over the Forex market and a skim through the crypto and the index markets. All right. So we have here the dollar, the benchmark, the big daddy of all the currencies, he who controls them all. Right. Now the dollar, what's happened here is, right, range low, mid range, and range high. Right? It's always a range. Now, one important thing is when you're looking to find a trade, then you're always looking for a one-sided movement, right? So what that means is if you can frame two directions for price to go, then it's better that you stay out. Down here, there is only one place price could possibly go, which is up, right? Which is why you were worn down here. Guys, dollar is bullish, right? Same over here. Guys, dollar is bullish, right? So as we speak, we have now broken out of the range high, right? Which means dollar is bullish right now. However, one thing is we have hit a major target on the higher time frame, right? Now, what happens when that happens, then we can expect a lot of chop. Remember? So if you go back a few videos, I told you that when euro hits that main target, which it had, then you can expect a nice chop fest, right? And that is exactly what happened, right? However, I think it's reasonable to expect that the DXY will at least draw up to here, right? Range low, break out of the range, retest of the range high, and then we rally up to this buy side liquidity up here. Right, so that's my draw liquidity on the dollar until proven otherwise. Plus, we've had a strong uptrending market, almost zero corrections, right? With zero down close candles during the entire last quarter, right? So we can expect some sort of chop, right? That's the weekly, and that is the monthly. The monthly, however, right? We are in this FVG as we speak. However, we're closing inside of it. You see that? So we went from wicking to closing. So it is showing dollar strength at the moment. And it looks like the dollar is going to leave a monthly FVG for next month. And perhaps that will be the FVG which we can use to target the buy side liquidity, right? Something like that, I would think. Now, going down to the daily, range low, range high, very basic range trading theory, right? Range low, range high, mid range. Now, what have you been told about the mid range? Any volunteers to answer?
You don't want to be trading the mid range.
Exactly. Now, look at what happened over here at the range low and how clean the price move was as opposed to mid range, right? This was last week, right? The fact that we could even extract some trades is a miracle, right? Because if you can trade a choppy market, then anyone can trade a trending market. Even in crypto in the year 2021, right? Everyone was an expert. Why? Because it was a strong uptrending market. Same with 2020. But as soon as you get a choppy market, then that is where true skill is honed, right? So mid-range, we refuse to engage with dollar except at the range extremities over here, which we did. And next is over here. So let's take a dive into last week's price action. All right. DXY. And I have some notes over here. Oh, what's this? That's my review. Let's remove it. All right. Remove these drawings. Okay. So the week closed with an FVG over here, right? So what you do is mark the key level, right? The order block over here, opening price, and the FVG. So it's an order block plus an FVG, right? Now, before any weekly candle opens, you want to mark 2 key levels and write this down. You want to mark before the week opens, you want to mark 2 opposing key levels, which may mark the weekly high and low, right? If you're bullish, weekly low. And if you're bearish, weekly high, right? Now, if you're strongly bullish, then only mark the bullish one, which will mark to you the low of the week, right? Because, again, basics is we're trying to trade in the direction of the weekly expansion. If you can frame a high probability weekly expansion, right, then that is the type of market you want to trade, right? Anything else is forced. Now, based on the fact that we've hit a higher time frame target, we can reasonably anticipate, with a voice crack, we can reasonably anticipate that there's going to be some sort of chop, right? Chop meaning inside candles. And that is precisely what happened last week, right? All that movement where it's hitting both buy side and sell side again and again, that is basically an inside candle, right? And these are candles you want to scalp, right? So these are scalping market conditions, right? Not trending swing conditions for now, right? So before the week opens, you're going to mark the place you expect the weekly low to happen, right? In this case, we mark the order block. 4 hour, right? So a higher time frame key level with a lower time frame market structure, quote unquote, right? Which means market profile, resisting highs, breaking lows, right? You got this, rejecting lows, very clean. This one candle, this one specific candle is the one that caused the expansion, right? You see that? This one over here, right? Close above. This one candle is the one that caused the expansion. So you have your key level, right? 4 hour, you got the breaker over here. And you got a 1 hour FVG. Now, when you see these imbalances all over, right, then we know that every single price moves for 2 reasons. Can someone mention the 2 reasons why price moves?
To
To rebalance, imbalance, and run highs and lows.
That's it, right? So when you see all this inefficient price, then you can expect a repricing, right? At least guaranteed to the over here, first one, and potentially to the lower gap as well. And what's the only reason you would expect this gap to remain unfilled? A bunch of reasons.
If there's a higher time frame breaker block,
Or same time frame breaker block, right? What else? Like why do gaps remain unfilled, right? Revision. Why do gaps remain? When do gaps remain?
So I think, due to balanced price ranges, SMT, and high damping PDRA, and also the mitigation block, like the sell side of the curve, you can reach out to the buy side. Yes.
These are the main reasons gaps remain unfilled, and you mentioned most of them. Vikash, right? If I'm not mistaken. Any other reasons, which they are, right, are secondary. But the main reason, when you see a gap like this, right, then you ask yourself, is it going to be filled? Yes. Why? Because price is always going to rebalance and imbalance. When shall it not rebalance, imbalance? These circumstances, right? Breakers, SMT. So dollar will fill this balance, will rebalance this imbalance, and euro won't. Do we expect euro to rebalance? No, we say it's an SMT fill of a gap, right? So we're expecting a price to go back down, right? Range high again, range high, range low. We smack back down, right? We haven't hit the key level yet. Now, do you get bullish here or bearish? Right here at this instance.
Bullish.
You get bullish or you don't get bearish, right? If there's not enough reason to be bullish, then at least you're not bearish, right? Because if you're bearish, then what you get is that, right? Beautiful. Now, what's missing on this chart right now? Who can tell me? Something missing.
Time?
Yep. Weekly open. Weekly close. These are fixed values, right? The open and the close are fixed values. And the high and the low are in between somewhere, right? Before every candle, open, close, fixed, high, low, variable, right? Variable with some indications of where they're going to happen, right? Now, the diagram, which I've mentioned before, and I'll mention forever, right? Every single stream, which is which one?
Open, high, low, close.
Yeah. Which is this, right? This is the lens at which we are looking, through which we are looking at price, right? Open, open, key level, and bounce, right? That is basically what we are trying to do, right? Open, key level, bounce. It's that simple. All right, so Monday, we skip Monday, right? Tuesday comes, and then at Tuesday, now in a trending week, right, you can blindly just buy on Tuesday, buy Tuesday at 3 a.m., right? And exit at Thursday, right? However, we're expecting a chop fest, so monitor price, right? Open, key level, bounce. Now, I had come over here and spoke off a retracement, and over here confirmed that this is indeed the weekly low, right? On Twitter, on the Turtle Soup Central account. And it was indeed the low, with a case of multiple touches of a key level. Now, here's another extremely important aspect, which is I call this as the weekly low, right? It gave me a bounce from the previous day's low to high. And then it came back down over here, right? It came back down, multiple touches of the key level, right? And it continued higher. So is this a success or a failure in your eyes? It's a success, because if you can catch a portion of the weekly candle, a slice, you're done. If you can catch a slice of the daily candle, you're done, right? That's all you're trying to do. Right? If you can catch the diagram, which is open, key level, if you can catch this bounce consistently, that's all you'll ever need, right? So it was a decent performance, especially for such a chop fest of a week, right? That is looking at it from the angle of the open, high, low, and close on the weekly chart, right? A breaker over here, right? And the gap. So the expectation is that this is the gap that will lead up to this buy side liquidity pool over here, right? In the upcoming weeks, especially now that we've had an inside week, right? The price is contracting and is then going to expand, right? My expectation is that we expand higher based on what happens on Monday, Tuesday next week, right? That is my expectation. An alternative scenario, right, which also have my eye out for, is the good old weekly gap we've had marked for the past couple of weeks, right, over here. This candle is the line in the sand for dollar bullishness, right? This candle's low is the line in the sand for the bullish dollar. If we close below this line, right, then we can expect lower prices. As long as we don't close below this line or we wick below it, then we are bullish on the US dollar, right? And observe how this inside week is going to lead to a massive volatility in the markets, right? So that was the DXY. When it comes to euro,
Sorry, Romeo. Adam is asking if he can speak. I think he's muted. I think he has a question.
we had a couple of trade ideas on euro, which formed last week, right? At these key levels, right? The gap, the breaker, that was one. High, low, higher high, lower low, breaker, right? There was no reason really to have this gap remain unfilled, which is why we stuck to the bias when it tapped into the gap. So this was the high of the week, and it was indeed until half of the week was over. Remember the model, which is the high and low of the week until 50% of the candle, right, of the time. So this was a pretty good example. And then this breaker, lower time frame breaker, turtle soup, and up we went. Now, Friday, should I review Friday? No, Friday is going to be a lower time frame teaching. So I'm going to leave this Friday right, for next week, because then it's delving into the topic of 4 hour and below, right? So from the lens of the weekly time frame, you got the open, you got the open here, you got the close, and you got your key level you mark below and above, right? And that's all you do. Open, close, key level, whatever happens, you take it from one key level to the other, right? Key level and key level. Right, so this is the weekly candle, which we don't expect it to surpass this range. And the same thing can be done with any candle, whether it's a daily, as we did on Friday, right, over here, or even the 4 hour on low time frames. And notice the importance of SMT in creating the candles highs and the candles lows. Right? Excuse me. And those are the colors for those who asked, right? Notice the role of SMT at the highs and the lows. And the same exact thing happens at the intraday highs and lows, right? And that marks the end of this review. Let me just also talk about the expectation of a bearish euro. It wasn't reasonable this week to expect a massive expansion into this drawn liquidity yet, right? Because the candle is still shaping itself. We've rejected this candle's low, right? So we'll see what gives. We've caught this entire move from up here till down here, right? Right now, for me, this is it's not an unclear market. It's a choppy market, right? So there's not one specific one-sided move I can see, which is why in this instance we scalp intraday until a higher time frame one-sided bias is clear. All right. And now it's time for the questions.
Sorry. I think Adam had a question and he's muted. He was asking.
Go ahead. And folks, try and have the questions be interesting, right? So it benefits most people listening, right? Because I know there's a few of you in here who are quite advanced, right? So the questions you ask don't really benefit the other people, right? So try and be inclusive, right? Let's not discriminate.
So, my question is, you said that SMT tends to form at highs and lows, right? So,
yeah.
Could you explain or give your perspective on the large SMT we're seeing between EU and GU right now?
EU and GU. That one over there.
Yeah, on the 4 hour profile, I believe.
4 hour?
Yeah.
You mean this one?
Yeah.
SMT refers to asymmetrical market conditions, right?
Mm-hmm.
So if you can determine one direction from the SMT, right, then trade it. But if you can't, then the markets are in a low probability condition, and you just leave them alone, right? Right now, all I can see over here is you smack into this, and you see what happens over there, right? So the draw liquidity would be up here, right?
Yeah.
That's all I see.
And that kind of counters your bias with EU. So this is why you would stay out.
Yes. Also, with dollar being bullish, right? If I see that GU is going to trade upwards, and the dollar is also bullish, right? Then that's either a flaw in my analysis, right? Or it's simply asymmetrical market conditions, right? There's no one-sided move I can see right now.
But you would still trade EU with knowing that this is going on, right?
I will scalp EU. This is a 4-hour SMT. Its implications are on the 4-hour, right?
Okay.
It doesn't affect the 1 minute and the 1 second SMTs I've flown all the time.
Okay. Okay. And I think Adam is asking to be unmuted.
Yeah, but Adam thinks too much. Let me see. Let me consider unmuting him. Where is he? Adam. Where's Adam?
I posted a question in the chat about figuring out what the confidence is of getting up to the top of the range from the bottom.
Excuse me. Yes. Adam is over here, allowed to speak. Nice profile picture, Adam. Looking fresh. Let's see. Where is he? Ah, there you go.
Yes.
Excellent. Okay.
Hello. Sorry
Let's
for
go.
the harassment.
No, it's fine.
So the most chaotic question was the closes thing you gave us. If it close above, then we bullish, then and so on.
Yes. Oh, there you go. Beautiful.
And you just said,
Gorgeous.
on the DXY the review, you said that FVG is the last is the line in the sand, and you said that you don't want to see any closes below it.
Right.
Do we need to? You don't want to see weekly closes or daily closes? Give you some something to be aware of.
Weekly, because the daily close above or below weekly level can be a turtle soup, right?
Yes, but if you're waiting the whole weekly candle to close, when are you going to trade?
You're gonna trade the next week in a one-sided, clearly one directional market, right? Not trying to gamble every single candle you see.
Okay, so that was the question, but on that example, so when you said that thing, people were asking that question like, let's just say it didn't close above the high, so it's reversing.
Right.
And you say that multiple closes above a high can be sus.
What do you mean?
So let's just say we're bearish. And multiple and like 3 candles.
Here's an example, and you're asking, Adam, you're asking about ranges and when to differentiate between a true breakout and a false breakout, right?
Exactly.
And there's some confusion in the number of candles, and how do you know if it's a real one or a fake one, right?
Yes, and how to know if it's sus or it's okay.
That will be discussed in depth next week. All right.
Okay.
So I have it in mind, which is also the question of what's his name, the guy who asked about the ranges question.
I think it was the beats working there.
Yeah.
I have no idea. But in celebration of Link as 1 week dinner, right? 1 week worth of dinners, right? So good for him. Even though the intention was never to give you all signals, right? Rather just show you how I read price, right? That's all I'm saying. However, this was an extremely clean range, which I've been watching since last year. Imagine, right? So it's a 1 week range. I was watching it all along here, even before I came on Twitter. Right? I came on Twitter in October, and I was watching this range since over here. Right? And I had marked this range low and range high out. And finally, it reached one end of the range, as you can notice. Uh, any type of trading you try to do mid range was pretty much fruitless. Right? Upfest. We don't trade the mid range. We only trade the extremities of the range. And if you do that alone, then you will never. You'll see your win rate increase massively. Right? If you only stick to the ends of the ranges. Right?
Romeo,
Because
Romeo.
there's always a ranging market.
My problem is, bro, is trying to find the ranges. All right, so what I've been doing is if price break above the, let's say, the buy side, right? The candle
Uh-huh.
that close above, um,
Right.
should that be considered as a new range? So if I mark out the high and low of that range and then look for a 30 soup on a lower time frame.
First of all, you have to keep in mind the narrative and the context of the higher. It's boring, yes, but it's extremely necessary, right? Because without the higher time frame, you're gambling, right? That's one thing. Another thing is, if you can't see the range clearly, then there is no range, right? Then you're trending. Over here, let's go back. Now, is this clearly a choppy back and forth market? Can you clearly define the range high and low?
Yeah.
Another mark of a range, right, which is worth considering, is having equal highs or lows at one end of the range, right, which you can aim at. Right. So here, for example, you have 1, 2, 3, 1, 2, 3. You wait for one side, right? You go range market, ranging market, 50% key level, right? The 50% is a level which leads the opposing ends of the range, right? Here you got a trend within a range breaker, low, high, high, low, higher, high, close below breaker, lower, low, right? So as soon as this happened, right? Basic range theory, a bullish or bearish. There's zero reason to be bearish down, right? And you have the range marked out for quite a while, right? The time it takes for the range to form is one aspect, and another one is the timing of the range. When did the range happen, right? And are you in level 2, by the way? You're Austin, right?
Yeah. Yeah.
Austin. Yeah. You're in level 2.
Yeah.
Have you watched it?
You have.
All right. Well, the answer is there, right? The timing of the range and how long it takes for the range, two important aspects, right? Because if you apply the range theory on the higher time frame, the quarters, for example, right? Then each quarter is being used to generate interest in the market on both ends, right? And then you flop
Mm-hmm.
the table to one side, a false flop, just in order to push it back to the other side, using the same interest which you've generated across this period of time, right? And if
Mm-hmm.
you open the higher time frame candles, you'll see why this makes sense, right? So you got this, and the best opportunities. Again, here's another thing, right? You don't get many entries in a price like, right?
Mm-hmm.
You the best entries you'll get is only two, right? But number 2 is part of number 1, the order block, right? So the best entries of any price like is going to be the turtle soup slash order block, right? Because they go hand in hand. The candle that stabbed into the lower high is the order block, right? Is the turtle soup. So in any price leg you're expecting, so you expect link to go from here to here as we did, right?
Yeah.
There's two entries I'm looking at. One is this over here, right?
Which is the
And
turtle soup.
And the second is an OTE which will form. Excuse me. So manipulation, that's my entry. And the second entry is a strong, violent retracement, right? Which will happen at a key. You understand? So you got this?
Yeah.
There you go. Entry one. Done. Now, I don't enter. I let the expansion happen. There you go. Expansion happened, right? Over there. And now we have formed a key level. Yes or no? Over here. You agree? Key level. And now I'm refusing to engage until it taps into the key level, right? So entry one, entry two, and I've reached my objective. All right, that is on a single time frame. You can play around and find more entries in the lower time frames, but on a single on a price leg on a single time frame, there's going to be two entries: the high itself and the OTE. That's it.
Okay.
Guy, I would
How do you anticipate?
go ahead.
You're saying?
I was just asking, how do you anticipate after the tutor soup how long it'll take for it to reach terminus?
That is when you slap on the data ranges, right? So you go back to a USD CAD trade of mine I had a couple of months back, I think 2 months ago, right? Refer to it and watch the IPDA data ranges episodes. They answer your question, right? Which is basically just looking back to cast forward, right?
Okay, thank you.
No problem.
A guy asked,
As they were
where would
getting
you put your
autographed,
stop
you
on
closed the
that trade?
A guy asked what?
Where was your stop at this trade, at this manipulation leg?
This one.
Yeah, the chain link. Was it a blind stop or some secret method entry stuff?
You're right. You're funny, Adam. It was both. However, a very basic method, right, of entering is a blind 1 to 3, right? It rarely fails, and it'll increase your win rate massively, right? Just a blind manipulation. Is the logic there? Is the time there? Has the accumulation happened? Right? A blind 1 to 3 is all you need, right? Yeah, pretty much.
So my question is,
Tell me.
I want to come back to your risk management protocol, which you say you take 50% off at the high that took the low, right? And then you take another 50% off at the 50% of the range, and et cetera, et cetera.
That is
How
correct.
do you calculate 3R and have a consistent risk when it comes to it varying so much depending on how high that high is in
But it does.
comparison to your stop
It,
loss?
it doesn't vary, right? If you're, it depends on your system, right? That's my system, the one I trade. But if you, everyone has their own system when it comes to managing risk, right? So you can be a higher time frame price like trader, and that's it, right? You have a fixed risk due to your entry model, which is a higher time frame price legs like this one. So it's always a range, and it's always 1 to 3, right? my personal risk management and my personal entry methods, which I use, right? That is something which will unveil itself eventually, right? But yeah, when it comes to the protocol, nothing new. It's partials at the important highs and lows, and runners. There's no fancy
Okay.
magic secret. Not today.
Hey Romeo, do you validate an order block if it closes above the wick or the body?
Above the candle.
The candle's wick or the open? Sorry.
No, the entire candle.
Okay. See, so you're saying you
If
want a body to close
yes,
above the entire candle.
if for some reason I'm expecting a massively trending market, whether it's seasonally, whether it's S&T, whatever it is, right?
Mhm.
If I have strong conviction that there's going to be a strong trending market, then I can consider the the
Open.
body, right?
Okay. In this instance, in chain, which one would you consider?
Which one?
In the current example, the down close candle which stabbed into this liquidity pool,
This
the
one.
high or the open? Yeah.
As
Yeah.
soon as this happened, then this one specific candle was responsible. So it's an order block with an FVG inside of it, right?
Right.
Always good to see, right? An order block. We displace above it. We smack back down into this one specific candle, and this one candle is the candle responsible for the expansion, right? Right over here.
Right.
With the ability of using the thrust candle as a stop loss over here. Right, this candle, the candle that disrespected the FVG, this is stop loss, right?
Right.
So you mentioned three landmarks that you look for to tell whether it's going to go from range low to range high.
Yes.
What are they?
Number one, taking out one end of the range while leaving the other end untapped. Easy, right? Number two, a deep retracement that happens after. So it's one, retracement, two, symmetrical. Remember? Consolidation, expansion, retracement, expansion, right? Similar price legs. Again, beautiful example. And the third one is tapping into the 50% of the range. And that is, see, what we're doing is trying to catch explosive price legs, right? And one way
Yeah.
to do so, using range theory, so one way to catch massive trending price legs, which are more often than not range breakouts, right? Is you wait for them to smack into the 50% of the range and then smack up higher, right?
Yeah.
And
So
that happened on the Euro 1 hour range as well, right? Last
so
week.
if this had not got to 50 before retracing, would that risk taking another low below the bottom of the range?
Say that again.
If on the link example, if immediately after it reclaimed the range, if it didn't get above 50% before retracing, would that would
Right?
that be a warning that it was going to go back below the bottom of the range again?
No, because then you have the line in the sand being this one specific candle over here, right?
Okay. So you would basically, if it went and made a lower low, that would be a loser.
Yes, extremely unlikely, but yeah, it'd be a loss, right?
Yeah.
No,
Okay.
and wonder and ask yourself why it happened. More often than not, when you're wrong on your when your stop gets hit, right? It's either one of two things: is you do not have the higher time frame bias in mind, or you're being a greedy bastard, right? Trying to catch some mega trade, 1 to 10,000 risk reward, right? So always be reasonable.
So a question I had for when you
Go ahead.
said before the week opens, you choose two PD arrays, one for the high and one for the low.
right?
Do you always use
That's
daily
in a
PD
consolidating
arrays?
market. If it's a trending market, right?
Uh-huh.
So if you're expecting a trending market, then you mark, but before the weekly open, you mark the trending PD array, right? So if you expect a trend versus a range, right? Before it opens, if you're bullish, then you mark one bullish key level, right?
Mhm.
And here's the open. Before the week even opens, right? And then you go, snack into it, and that's it. If you can catch one of these or a couple of these per month, you're good, right? You have no more models. You'll never need to learn anything else ever again, right? If you can master doing this, which is catching one of these weeks a month or a couple of these days a month, right? That's all you need.
Okay.
If you're
And
in the ranging market, then you get this daily. And then, as you saw, you go down to the 4 hour, the 1 hour to see what you can see, right? When it comes to market profiling and market structure.
okay. And do you use both of those PD arrays, those key levels in the ranging market for pre-trade, or do you just not trade it?
What kind of market is it, Ibrahim?
Ranging market.
Okay. And what happens in a ranging market?
We chop, we consolidate, we buy the lows, and we sell the highs.
A ranging market is a market trapped between two So there's two key levels close to each other, right? And both are being respected. There's not a clear disrespect of one PD array versus the other, right? So if you know that it's stuck in this range between these two key levels, and I hear someone typing furiously, right? I don't know who you are, but keep it up, right? Yeah, you're gonna play the bounce from key level to the other key level, right?
Yeah, yeah. And you're not playing the entire expansion leg. You're playing the
No,
bounce.
it's
So
a portion.
you are,
If you can catch a portion of the candle, you have succeeded. You understand?
and that's why your risk management is the way it is. It's because you're not trying
That
to
is
catch
correct.
the entire leg. Okay.
That is correct. In fact, I saw some goofballs on Twitter saying, "Oh, hey, it didn't hit the last." I posted a 1 to 5 risk reward trade, right? So it reaches 1.45 RR and reverses, right? And they're like, "Hey, it didn't reach 5." That is a sign of a non-trader. If you plan out a 1 to 5 trade and it gives you 1 to 4, that is a success, right? If it gives you 1 to 1, it's a success. You understand? Study why it didn't give you the whole thing, because most your stop loss and your take profit are 90% of the time based on greed, right? So it's always a healthy practice to remove and allow the stop loss to breathe and to lower the targets you put, right? Because it's human nature. We're humans after all. I'm pretty sure all of us in this group are humans, right? I would hope so. So it's in our nature to be greedy, right? Especially when
Romeo, before you go off, can you
take.
go over ES and NQ?
Yeah, sure. Although I've been staying away from them, which is not correct because they've been trending pretty trendily. Is that a word? No. But from the last week's review, a lot of you should have been selling this week, right? And I'm sure a bunch of you did, right? So from last week's review, the index futures were not looking good at all, right? Nice retracement, right? So
We can't
this
hear
was
your screen, by the way.
Can you see it now? Can you see my screen now?
Not yet.
Can anyone else see my screen?
No.
No. Alright.
No, no.
No.
Okay. Share screen. How about now?
Not yet.
Now.
Yes.
Yes.
Now is it?
Yes.
Yeah.
So NQ, right? I reviewed it last week, right? I gave a look at it rather last week. The only times, and here's a nice example. If Austin, you're listening, right? The only time I had looked at Nasdaq was over here, right, on Twitter, and over here last week, right? So I didn't come here, which was also a good opportunity, by the way. But I didn't like it, right? So over here, the range high, range low. Nothing else comes close. And the drawn liquidity for Nasdaq, although it has been hit on the E-mini Nasdaq, it's not been hit here yet. And there's a lot of money in the CFDs. So the drawn liquidity Nasdaq is at these two lows until proven otherwise, right? Yeah. I've given a trade idea as well this week, which did not hit the entry, and I suspected that because there was an SMT right over here, right over here. There's an SMT divergence between ES and NQ. Right? So that happens sometimes. You could have FOMO'd in, right? It would have worked with less risk and reward. But yeah, didn't give the entry last week.
Also, Romeo.
Hey, Romeo.
When do you move?
Hey,
Let's
sorry, go
just
on, go on.
say, you place a blind stop. He asked, at what point you move the stop to break even? Is it when it takes the high that soup?
Beautiful. Now, that is delving into my personal risk management protocols and my personal risk models, right? Which I'll discuss later on. Not now. Not today.
Also, the time when you said study why this OTE failed, that caused a lot of chaos, and every hindsight warrior started to give its own explanation. But can you go on that?
Where?
The one in DXY
Okay.
in the very first video.
I remember. The answer is because the market makers saw me expecting an OTE and they failed it on purpose.
I
Any
think
So
questions?
Rain is
so
stuck.
when you expect OTEs, you can give us a signal for us to fade that, or
Yes.
how are we supposed to learn from that?
Every time. Every single time. What happened was, Adam, was that they closed below the intermediate term low, right? And when you close below an intermediate term low, then you can expect them to target the rejection block and then the low of the price leg, right? On the same time frame. Right? So that was the indication that the OTE was going to fail, and this also goes to the 0.618 fib, right? Which is a key level. If you close below the 0.618 fib, right, then you use it as an inversion level to take you to the low of the price leg. And that is the answer on why do what's the indications of OTEs failing.
My answer is that bias was still bearish because the soup, it was a pseudo soup. It was a shallow liquidity pairs. That was my answer, and it is not a clear answer. But what do you think about shallow liquidity pairs? Do you expect another soup, or it just goes from there?
I'll answer your question with an indirect answer, which is all my losses are break evens, never losses. Right?
Yes, boss. I will try to understand what you said.
You understand?
So you move to break even before it gets a chance to come back.
To come back and show me if it's gonna dig deeper or not. Right?
Yeah.
And if it does, you re-enter.
Always, of course. Same thing that happened last week. Remember? So I gave you a retracement of the 820 Judas, right? And then when it stabbed back into the high, I stuck to the bias, right? Because there's a high and low in price, and there's a high and low in time, right? There's two highs and lows, right? If you try and of course you can, but if you try and trade the highs and lows in time without practicing them, then you're gonna get wrecked, right? To begin with, and to help your learning process, always trade the highs and lows in price first, and then when you get that, when you familiarize yourself with the pattern that they make in time, which is the same price, but a dig deeper due to time, that is when you go and trade the time as well, right? But to begin with, just have a rough estimate of the area and trade that, right?
By time, you mean the 3 to 5 in London, like that?
Yes.
Okay.
The
And
open, high, low, close, and the profiles of the candles, right?
understood. And Romeo, on the Nasdaq chart that you have right now, on Friday, if you can see, it sort of consolidated and expanded below, right? But if you see,
Nasdaq.
yeah, the Nasdaq, and the initial low before the expansion lower on the, I think it's on the hourly chart.
You think? Or you know? Which one?
Yeah, the 1 hour chart here on the Friday, you see your initial low, right, on London,
Right.
and then it goes a little higher, and then it smacks back lower. Now that low was also it had hit the key level of the FVG on the left side of the order block.
Okay.
Right,
Okay.
right. So I was expecting price to go into the imbalance above, at least above
This
the
one here.
50% of the range. Yeah,
Right.
but it didn't. So could you explain that?
Okay. Okay. Well, even if you were expecting it to go higher, right? Here's some hindsight things in mind. Right. Number one, range low, range high. Right. This should stop you from trading, from expecting any higher prices unless you break over the same range high. Right. That's one thing. Another thing is this a trending move or is it a counter trend move?
It's a counter trend move.
Exactly. You don't want to catch. You want to pay less attention to counter trend moves, right? Try and have your focus only and solely on because counter trend moves tend to sometimes work, sometimes no, right? But if you're with a trend, then the trend is your friend until it ends. And who's calling? I guess I'm calling. Mute your mic. Thank you very much. Right.
Okay.
So the trend is your friend, right?
So sometimes you're saying that in counter trend it might not come back to the 50%.
That is correct. It might
Okay.
stop at the 30, 38, right? Or the 27%. Then what do you do? Right?
Right. And but you said that this was a range high and a range low, right? But there's a range high and a range low before that. It took
Where?
out the low, then it broke the high. So
You mean this one over here?
yeah, the smaller range before it took out
Over
the
here.
low. Yeah.
Okay, this is are you Jubin?
Yeah. Yeah.
We have Jubin over here. Pattern trading, right? This is, that is not the goal here, right? We're not pattern traders.
I mean, it's a range high, range low into a key level. So I thought so.
Yes, but no, no, I wouldn't take that.
Okay.
That is not something I would consider. Plus, we're respecting. Did you look at this? The 4 hour?
Yeah, the 4 hour FAG. Yeah. When? Okay. Yeah.
That alone is a reason to stop. Right? And the higher you go, right, the more you see the bearish PDRAs being respected and the bullish PDRAs being broken, right?
Right.
Then that would be a reason for you to avoid all counter trend trades and only focus on the trades with a trend. Right?
Got it. Thank you.
Romeo,
So
so when these lows are taken, would that be an instance when you are considering a counter trade because we're at the bottom of the range?
Even over here.
Yeah, because we're close to that monthly low and the
Yeah,
bottom of that range there. So would that be a consideration for a counter?
of course. And counter trend trading is also a very interesting topic, which I will also talk about, right? Because I as well, I find myself catching counter trend trades quite a bit, right? Not as much as the trending ones, but there is a method to catching the correct counter trend trades, right? Not like this, which I will also be talking about, but not now, later on. Right? I've given you more information to chew on for an entire week. I'm pretty sure.
can I ask? You
Last question.
mentioned 3 to 5 a.m. I have a list of times written down here. You said that beginning of London open kill zone is a good time to look for soups. You said around end of London open kill zone is a good time to look for soups.
Right.
You also said 10 a.m. is a good time to look for it, or 9:30 to 10.
Uh-huh. Right.
And you also said London close kill zone, along with 1:30 p.m. and 3 p.m.
London
So
close. London close and 3 p.m. I'm usually looking for an SMT at that time, right? Not exactly.
so you're looking
for an
you're
SMT,
looking
a failure
okay.
swing, right?
Okay. So what makes it different for you to look for a trade at the beginning of London Open Kill Zone versus the end of London Open Kill Zone?
Ideally, right? And the only difference is a trending day versus a ranging day, right? On a ranging, I would expect 5 o'clock to go and take away the London soup that happened, right? In the same direction, right? On a ranging day. On a trending day, I'm expecting 3 a.m. to form the low, right? And that's it.
Okay. And does that change as well for your New York times, like 8:20 a.m. versus 10 a.m.? And when you expect those two times to play?
Which ones?
8:20 a.m. and 10 a.m.
No. 820 is something else. 820 is something completely different. 820. 820 is you're gonna mark a counter trend move, right?
Okay.
Have that one. 820
And
is the counter trend move, and then 10 a.m. is the swing top formation, right? 9 to 10, 10, 10. The macro, quote unquote, right?
Okay. And do you look at these times as the beginning of the Judas, or do you look at them as you want the load to form at these times?
The latter. Anything else?
Yeah.
Excuse me. Oh, the market makers are poisoning me.
Yeah.
You're saying, excuse me. You're saying?
So you say that there are 3 trades per day. One for the first soup, the OTE, and the last soup. Are they all A plus setups, or they can be?
If you can catch a classic sell day or a classic buy day a couple of days a month, then that is that's a living right there, right?
Also, if if you have a checklist like the other Twitter traders have, do you have a checklist? And if not, how do you rate the trade ideas, like the one you give, like the C plus and the C stuff?
I will go over the rating later on.
Please, Romeo, we only have a weekend, so later on is a bit too beefy for one live session.
Later on will probably be the next week, right? Which is going to be a nice juicy one, and perhaps, by the way, because you guys have paid, which shows me that you are more serious than the casual watcher, right? So perhaps I will extend it a bit more, right? Just for you guys, right? Of course, free of charge, right? Just an extension to honor the seriousness that you guys have joined, right?
Thank you. Can I ask as well?
Whether you paid, whether you photoshopped the receipts, right? You were serious. And you deserve an extension. All right.
Yeah. Can I ask for your 1:30 p.m. and 3 p.m. times that you look for sellers? Do those only apply towards indices, or do those apply to forex as well?
Forex, I like trading in the morning, right? And the index futures in the afternoon.
Okay. And for your London close kill zone, I'm assuming you look at that solely for forex as well.
Yes.
Okay.
Although you have the same index futures, right? The same topping trade. That's the whole idea. Is open, high, low, and close, right? That's all there is.
And another question is, do you have a constant time frame that you look for a specific key level to trade within
folks,
a certain profile?
Yes.
For each one.
It is my secret sauce 69-minute time frame. That is Enigma.
Roman, I got a quick question. When you are taking a trade like a range low position, what is it that you're immediately looking for in price to show you that you're on side?
I'm looking for it to close above the candle that stabbed into the low. That's it. It's that simple.
Okay,
right?
Thank you.
Right? No problem.
Okay.
Anyway, folks, it's been quite a long one, right? Enjoy. Hugo, if you're recording still, are you recording? Are you there? You on this? Okay, and if anyone else is recorded, please send it to me, right? I'll post it on the group. And the people can clap for you, and you're the hero for the day, right?
Okay.
So thank you very much. Thanks for listening, folks. Monday, of course, we watch. Tuesday, we enter. And Wednesday is a classic sell day or buy day, right? So it's all planned out. Don't rush. Don't over leverage. don't get wrecked. And I hope you find this insightful. And I wish you all good luck and good trading for the week. And I will see you next weekend.
Goodbye.
Have a good week.
Goodbye.